You were saying a story on Discord about how you went into Home Depot and made more than what you spent or something like that.
Oh, yeah.
Tell that story, I guess.
Well, I was just playing with my phone, and I thought for fun I'd set a trade on my phone, and so I went into Home Depot and
Good morning.
Good morning, folks.
spent $53 there, and it made 84 in trading. So that's just thought that was
Hey, that's awesome. I remember sometimes I would be going down to Vegas with Sean. We would be driving down to Vegas for some trading function or whatever, and I would drive and he would trade, and he'd be like, okay, whatever I make tonight depends on wherever I make on the trip down there, depends on if we're eating in McDonald's or Caesars. We ended up eating at Caesars. All right, so we got some
Caesar's Palace or Little Caesars?
Yeah. No, he loved that. I think he liked that buffet in Caesars or.
I like Little Caesars. That's good.
Yeah, I'm not sure if it was there. It was
this morning.
Look at these runs, man. Whew, 20 pip runs. All right, so when we get these big runs, what does that tell us? What's the first thing that tells us?
Outside range.
That is not the first thing, but yes, it could definitely be an outside range. All right, helicopter Ed, you got it. Joseph got it. Go light. The first thing is go light, right? Because if you get caught in something like this and you're heavy, or something like this and you're heavy, it could be the end of your trading day, right?
I get caught in this one.
You got caught in this one?
The first one. Yeah.
Yeah. And let's just measure this. One of the things that Cool pointed out yesterday is that, or last time we were trading with him, was that we got a 30 pip swing down, and we'll say there's a 20 up and 23 down. So let's just take a look here real fast. It looks like it moved up pretty good. Moved up quite a bit, actually. So I traded this last night, and I got caught in this because I played the bounce right here, and I got caught in this little rundown, and I didn't know how far it was going to run down. So I just jumped out, and I'm like, okay, I'm done. It just took like a few trades, and I'm like, I don't usually trade on Sunday nights or before I go to bed. So I'm just like, I don't trust the market. I just got out. Yeah, so here we go. It ran up quite a bit, ran up a lot. So what I'm looking at right this second is if it comes down, you could be forming a big old head and shoulders on the 5. It also could look to fib this move right here if it breaks below. It's definitely ran up, and this is the response to that run up. And we'll see how big of a response that needs to be. So definitely right here, it looks like there's a possibility of a break lower. But it's kind of difficult to say if it's going to run back up and price cycle back up and touch this, or if it's going to continue a break lower and create this head and shoulders and continue to run. So with that, if you're going to get into sells, just a second, I gotta be able to draw here, or I'm just not saying. All right, here we go. If you're looking to get into sells, I'd probably look to start selling here, because again, it could run up. What I'm looking for right here is a cross. If it crosses this, really, if it crosses this, it could continue up, right? But if it fails to cross this right here, it's going to come back down. However, it came all the way down, and we can say this is a price cycle. So I'd look to start, for me, I'm probably going to start building into shorts, but I'm gonna just see if I'm about taking profits. And I'm gonna start early, but I'm also gonna start light. So the key to today's trading session is definitely light. And then we'll recognize if the market shifts on us. So what I'm gonna do here is I'm gonna start taking some sells on these action points, get into a layer here, here, here as it decides to go up. And if it turns and goes down and tests this and just breaks through, this is where you want to turn your wobbling into riding the wave there. That's the way I'm going to play it. And we'll see how it goes. Yeah.
When I fib it on the 5 minutes, it's turning here at the 38.
Have you fibbed this move right here?
Yeah, that from way down.
From all the way down?
Yeah.
So we have that bounce up. Again, just trading super light right now because of these moves. Now for this, it might be give me an opportunity to reposition these trades down here. And I'll take that and just kind of say, okay, if it comes down off this candle, at least 50% or whatever, I'll pop out of these trades. And again, super, super light here. Because we kind of anticipated this kind of price cycle back this way, but we're setting up for a move lower. So I'm just building into a move lower, and that's what I'm doing. Now, all these trades go away, and you got to fix them or get rid of them if it crosses this. Okay? So we're just anticipating that this does break here instead of a bounce off support. All right. Did everybody get all their holiday shopping done already? That's what I love about online. Don't have to go to the stores. I hate going to the stores. My wife tried to get me to go into a couple stores on Saturday, and I'm like, nope, I'll drive you, but I'm not going in.
We missed you at K9.
Did you have a good holiday season that's at work?
Yeah, we did.
You guys are probably full, weren't
you? We were full for boarding, and then we had our Black Friday sales, and we had a really good day Friday.
So that's awesome.
So, and then we're running small business Saturday deals until the end of the month.
Oh, sweet.
So it's good. I've got my payroll in the bank now through the end of the year. So
that's always good, right? So It was a Black Friday for you.
It was a good Black Friday.
That's awesome. All right, so here's kind of a telltale thing right here. That this candle shot up. It's coming back. This is like that 50% mark. And if it fails to cross this, that means it's going to move a leg higher and probably test this. And so if you wanted to wobble this, you could. There's not a whole lot of meat on the bone, but let's see. What I'm looking at is to see if we're going to get any sort of consolidation range. And I just remembered I forgot to look at news. What's the news say today? Anybody check the news?
At 7.
What's that?
We just had news at 7. I don't remember what's next.
Is this candle then we consider an exhaustion candle, this yellow one, the last ditch?
No, I mean, not necessarily, because you're at the end of a price cycle. And so I assumed that it would run up, and it's not necessarily bigger than than like this candle, right? You can see that candle, this candle. I would say an exhaustion bar is when it breaks the top of a support of a support area and then fails to move higher. And it's usually followed by a pretty big wick. That's when I look at an exhaustion bar, right? So this one tells me that it's trying to move higher on the price cycle. And I don't think it's going to come down here and break this. And so what I'm going to do is I'm just going to pop out of these guys real fast for a little bit of profit. And then if it pops back up, I'll re-put these other ones, because these guys, right, these trades right here are in a good position for me. What I mean by that is if it does in fact break, it's a great position for me to ride the wave. If it doesn't break and decide that it wants to come up here and test, these trades are in a better position for me to come down and fix these guys than these trades were. So they're easier for me to fix and a better position for a ride the wave situation. Because I don't think it's going to come down and break this on the first attempt. I never usually trade the first attempt. However, being in a position to capitalize on that is also good, right? And so because of the way that the market is running right now, where you got 20 pip price cycles, you could get that 1% today just on one ride the wave being super light. Okay. And that's kind of the way we're trading right now, is looking for an opportunity to ride the wave also being super light. So, and put money in the bank too while we're at it. So if it fails to cross this right here, no news. Thanks, guys. FOMC going to be speaking. Yeah,
So it's now a 10 pip price cycle.
Yeah, usually price cycles don't change until you get consolidation. So I'm wondering if we're going to get some consolidation right here. And if we are, then I can wobble through that for a second. I think I might. Just looking for an opportunity to pick up 2-3 pips here. Sorry, putting a layer here. So kind of in my mind, I'm going to see if I can't hold this layer right here for the ride the wave. And then I'll just use these layers for the wobble situation here. Or I'm just kind of picking up a few pips here or there. We'll see if it comes back down and tests the bottom. Really didn't test. And it came close. This is where I'm thinking it's going to test. Could get a pretty good run down if it does in fact hit, or it does in fact break that. And could be. So I'm looking at risk versus reward. Definitely still want to be super light here. Bum, 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 bum. Bum, 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 bum. Just the wait and see. See if it does in fact break. If it doesn't and get into stalls, and probably get out of these guys on a stall. We'll see what happens down at this action point right there. And I just blew by that one. And then stall. So let's see, we're early in the candle, so I think I'll wait until a little later in this candle right here. All right, I'm going to take these guys. This layer right here, take just a little bit of profit. Because it failed to do that, popped up. Usually when you get that, a wick up, if we're going to start to consolidate, this will be where it's going to consolidate at. Still kind of nervous right here. So this is the area that, okay, so we started the day trading light because of our price cycles. But this is also the area where you should trade light regardless of price cycles, because it's a breakout area. And so I was kind of nervous to always put buys on, to always get into buys, because we're at a breakout area, but we're also at a bounce area. So you're like, I'm nervous to put sells on. And so that's why I was like, I want to try to get my sells as high as I can. Here's a test of that right here, of this bottom, testing the bottom and seeing if it wants to break. Again, this could be considered that first attempt. Over here on the 5. A couple minutes left here. So this is what I'm looking for. If it comes up into this area, I'll build another layer for another test. And that's the next move I'm looking for. I was just about to say I didn't see Josh on today, and there he is. I was going to be like, what's going on? There's no Josh today? Like, but nope, you're here. Good. All is right in the world.
No, I'm here.
Everything is good today. We got Cliff, we got Josh, Doug, Drew. What a surprise. That's awesome. We got a lot of people on. That's awesome, guys. I'm glad to have you. Hobble Wobble, Remy. Then do we have Nick squared or just one Nick today? Oh, okay. Do we have the Nicks? I only see the Nick. Let me see Kovash. All right. So we definitely broke this. We got 30 seconds left for that confirmation of that break. So with this layer, I am in kind of a ride the wave situation. So whenever I do that, I also like to secure this layer. So I'm going to go ahead and do that right now. So I'm going to secure this layer with stop loss. And I think I'm going to put that just above this. So if it does decide to go run back the other way, at least this layer is now secure for profit, but it has to cross this and this in order to hit that, right? So give it a couple areas that it has to cross before it takes me out. And then my normal way of riding the wave is if it does decide to break lower and keep running, I wait until we get a candle that breaks above this. So that's where my rule says to get out. But on this, this is really, I could see it coming back and testing this. Generally, if I'm not in a breakout situation, this is a high probability trade setup for me. If I'm inside of a trading range where it breaks an action point, comes down, and then it comes back up and retests this right here. I'm not taking that trade because it would put me into buys. And right this second, I don't like buys, as we haven't really hasn't really created a new bottom yet. So if it does pop up here and test this and does do that, I probably will get into some sells right there for a test of the bottom, as long as there's pips to be had, and there are pips to be had. All right, take that for just a little bit of a wobble gain. Going in to the bottom. What happened? All of a sudden, we got these huge price cycles, huge candles in the market. And then when we start trading, just kind of, we're still getting one-sided directional moves, but we're not getting these candles. I don't like having less than a pip candle. Doesn't make trading fun. Okay, there we go. And back up for the test. I think I'm going to throw a fib on this like Cliff's doing. And I think I'm going to just look at this right here. It's this move, because this is like the move of the head and shoulders. So if you fib that, or 23%, if you go all the way to the top, we're at that 50% mark. So there's a couple different points right there. So it's just resting. You're either at 23 off that move or 50% of that move. This move is really the one that I would trust a little bit more to fib than this whole move, because you did get consolidation right here. And you could have fibbed this one and it gave you 100% right there off that. So that's what I would do. I'd break it up into two different moves. So we'll just kind of keep our eye on this 5-minute chart over here.
Why would you fib that
What?
instead of the whole move?
Instead of the whole move? Just
Yeah.
because you had this action right here. Sorry.
Oh, the consolidation here.
Yeah, exactly. Which creates this kind of a head and shoulders type move. Does that make sense?
Okay.
And so I would have fibbed this move separately.
Okay. Got you.
So we've been talking a lot about the Sharpe ratio.
Mm-hmm.
And this is like, if you can get into a situation like this where you're trading super light in an account and still making good profit, that means that your risk is low, but your profits are high, which gives you a really good Sharpe ratio. Oh, man.
Okay, to fit.
Hate when it just wicks on me like that.
To fit this candle.
Yeah, that's what I'm going to do. Just kind of So again, these are going to be small, short trades for a pullback on this candle. And then continue to do that quick. I just don't trust this candle when it breaks through a couple action points. And now I'm looking for that move right there. Just gonna peel off that. See. Just gonna take those because of the stall. And it was so it did two things really quick. It stalled here and it also stalled at 50% of this candle, right? So normally what that tells you is it's going to come back up, retest that. So it gives you an opportunity to recycle your trades.
Okay.
So I'm going to do.
Okay.
Yeah. I need to be in, when I say light, I don't mean like this light. Can't take the bus route to profit. So Jan asked how he measures that. Here in a minute, how you measure like the Sharpe ratio, sorry. Here in a minute, we're gonna give you that. So that's what we've been working on in the background. So you can see every single trade that you take, it'll be attached. There'll be a number attached to it. And you want to kind of be between 1 and 2 is really good. Anything above 2 is exceptional. So we've already got it calculating so I can see it, but now we're working on forward facing that for you guys on the back end. So I can pull the report from an admin level and see it, but we're trying to get you guys to be able to see it. Because that's going to be pretty important for when we launch leagues, and so that's why we're trying to get that together. When we get leagues all automated, I should say.
Does it just look at the closed trades, or does it look at?
Yeah, it's on every individual trade.
Yeah, but does it just look at how it closed, or does it see how much it drew down? Like say you go into a deep drawdown, but then it eventually wins. Does it see that drawdown or does it just see the win?
That's a good question.
Yeah.
I'm not entirely sure on that, but I'll get the answer to that. That's a good question.
These are everything.
But I want to say it doesn't look, I think it just looks at,
How it closed.
yeah, profit or loss, right?
There's different stats.
But yeah, you're right. And I'm not sure 100% how Sean has it. I know it's just a formula, but I didn't ask him what the formula was that he's using. I'm pretty sure it's the same.
Stats for looking at how much drawdown you pulled.
Exactly.
It's like MAE or something.
Mm-hmm.
Curious.
All right. So here's not necessarily if we start getting higher highs, like this is the bounce point right here, right? But everything said that it shouldn't bounce, but because you're getting, lower lows. But if you start to see these high creeps in, crosses this, then it kind of negates this move. So I'm keeping my eye on that as well as I'm keeping my eye on bouncing down, right? Still trading super light, looking just for opportunities to pick up profit along the way. And I'm going to start probably banking profit here and there until we cross this right here. It's going to go back to kind of sitting on my hands or keeping light times 2. This is my light times 2. Basically, I'm trading light because of the price cycles, but here is where I'll really just kind of just not be so aggressive and taking layers and positions. Just because, again, one, it could bounce or it could break. And you just don't necessarily know. Like here, I thought it was going to break up and bounce. And so usually when it does that and it breaks again, if you get a break of this low right here off the 5, generally means you could get into a run situation. So I'm just trying to be cognizant of that. So back to this. Looking at this action point right here, but also thinking I might peel off some of these bad guys that are not the best placement, but we'll see what the candle does here. Yeah, I think I'm going to peel some of these guys for a possibility to recycle them. Past that action point, so hold on to that one. See, you got 5 seconds left. And it's coming down and test on the bottom. We'll hold on to that test and see. And there you go. Kind of blew past that action point. But we're way early in that candle. So this is the question that a lot of people have is, when do you take your wins? When do you not cut them short? All that kind of stuff, right? And so you got to come over here and look at this 5 minute. You got to see right here, it's playing on that, coming down and testing this. And there's another one right there. All these points right here represents bounce areas in the market, right? Where you could bounce, bounce, bounce. So either one of these points are a good place to take profit. Absolutely, they're a great place to take profit. What I typically do is I go ahead and put a stop loss to secure my trades in case we get just a huge spike up. And I like to have a secure trade against, it has to break that, and then it has to break another one, right? And I know that that's giving back a lot of profit, but it's risk versus reward. And then if it does break down and continue to run, then I turn into my ride the wave rules, right? Which is if a candle creates higher than the previous one. But we're not getting huge runs like I thought we might. So there's nothing wrong, nothing wrong with taking profit here where it's at. Building into another layer if it fails to break this right here for a look down on the bottom. So there's nothing wrong with taking profit. Anywhere you think you're going to take profit, take it, and then look to get back in, right? But I always secure this trade so that it doesn't come back on a big, not going to, that's pretty unlikely. We're going to see a huge candle, but if we weren't dealing with like 20 pip spreads and this was a break and this is only like 3, this protects that layer, right? So now I can build into it. And honestly, this is where sometimes I get those huge wins, like the other day, Wednesday, got like an 11% return because I was able to secure my trade, build it into another position, secure that, and then it broke. And then it broke out against me, and I was able to get heavier. And it's okay to go heavier, or like to build into a heavier position if your layers are secured. So let's say that I have 50 right now. I have 25, but let's say it moves against me, and I put another 0.25 on. And so now I have half a lot that's secured, right? As long as it's secured, now I can go in and look for another half a lot. And if I'm in one full lot and everything is secured, then I can look for another opportunity, right, to get in. And so I can start doubling my position and get in heavier as long as they're secured. And so that only happens when you get these larger runs, a breakout, something like this, where I can start building in, where you start seeing the wicks are forming on top. I guess they're really on the bottom too, but you still are trusting that your bias is still, hey, we're still going down. It's got to cross this. So if it pops up, I'll continue to build into more. And if it breaks down, I'll secure both layers, right? What you don't want to do is go heavy on this layer stack to the point where if it does come up here and hits this, then you got to fix this layer basically, right? Or this layer becomes an ouch layer if it never comes back and touches this, where you fix it, you take a loss, but it's too heavy of a loss, right? And so you got to manage your position size with everything else. So just like right now, I'm going to probably look to build here and then peel off here if we get a stall, peel off those guys right there. see what this is going to do. We're 3 seconds on that candle. It's stalling. So I'm probably just going to peel off these guys. Just a little bit of a better placement. So I like these trades better than I like these trades, right? Because they were at the bottom. And I'm just repositioned those layers basically. So there's a couple things I'm looking at right now. Like where's this turn going to happen, right? Because generally you do see a turn in the market where you're going to start moving higher. So we moved low all, for the past little while. We can continue to move low, and I'm going to continue to trade that until that turn happens. So I get confirmation. But when's that turn going to happen? So that's the first thing I'm looking at. The second thing that I'm also looking at is if we do get another breakdown lower and I hit a goal of like 1%, I might just be done trading and call that good and say we're done, right? And so I'm looking for that too. So that's like the second thing I'm looking at. Yeah, I kind of figured, Bob says we're at a major resistance. Yeah, I kind of figured we would be coming into this right here, right? You kind of see how it's kind of formed. Drawings. So I don't necessarily need to move out to the 1 hour, just kind of move back on the 5 minute, and that gives you this. And if you were to move to the 1 hour, you would see this right here. So it has to break down inside of this in order for this run to have any continuation, right? Or it could bounce. So it's like I'm looking for either one of those. However, I never really feel comfortable taking like a true wobbling because we're not in any sort of range. And so if I'm buying and selling, that's not what the market is today. It's not conducive for a wobble situation, right? And so it's more conducive to find the trend, make the trend your friend. That's what today is all about, right? However, that being said, because we're not getting any of that break, I'm going to peel off some of this profit right here and look to just recycle those trades. So back to my previous thought process, I'm going to keep this layer on. Maybe I might look for profit on that one. I'm going to keep this layer on as a ride the wave layer, and then maybe pick up a few scalp situations here. So just kind of scalp into here as it moves up and down. Not necessarily taking buys because I just don't want to be in a buy and it does in fact break through, put us into that consolidation or break through that hour. Support and resistance. Support. So that's the way at least I'm analyzing the market, right? Another test. So you could say that this is another test again, kind of going back to the rule of three. One test, this could be two. Let's see if this is the third test. And we see if we get a break. If it's going to break, I think it's going to happen on this candle. If not, it'll probably come back up across this, and that tells me it's going to test that if it crosses that. So we'll see. 20 seconds left. There's 5 seconds. did not break. So now you got to look for it to break the top, or it just passes the baton to the next candle. Say, I didn't want to do it. Maybe you do it. So if it breaks here, it'll run. If it breaks here, it'll come and test that high. And if it breaks here, I'll look to sell in as it comes up to there. So is it gonna hold? 50 seconds on the candle. Because it did that, I'm probably gonna just move my stop loss down a little bit more. These guys, put it right above that. Again, I'm not looking for the stop loss to take me out of profit. I'm just looking at it to secure more profit, right? So we haven't really been in a true ride the wave situation where it's just kind of, usually when you get into a ride the wave situation, it's a true breakout, right? Where it just kind of runs. We've been in more of a marching market type situation since here, really, the last 20 pips. Because of that, it's kind of ran 2 price cycles on us. I would think that it's going to come down here and not run another price cycle, kind of test that. And so if you're holding on, this could be a great place to get out. I can see that this could be a place where it could turn, come back all the way up and touch this without breaking this channel. And so this could be a max profit situation right here. And so I'm kind of looking at that as a possibility of a get out. Just because we're stacked 2 price cycles deep, it's at a good bounce point. If I were to drop the fib, I'm pretty sure that this is also a fib level right there. So all signs point to be like this would be a great area to get out of everything for maximum profit, and then just look to maybe get back in as you get that price cycle back up. So what I'm waiting for is for it to actually test that. Come down and touch it. Doesn't necessarily have to, but let's see if it does. And then the action when it does come down and touch that. So if it breaks this with a candle, body of a candle, I'll probably get out as well. So, because that means it's going to usually start climbing higher. And those are kind of my exit strategies in my head right now. To get out of all this.
David, I was thinking if it break this consolidation, then that would be the place where it's
this consolidation. or this consolidation?
This,
Right,
yeah,
the
this
1 minute.
yeah.
Okay, gotcha. Yeah, so we're come down, we touched it. So there's example number 1, it touches it. And then if it does in fact break higher than that on the 1 and close the body close, that could be the part where you get out. Also, if you guys are hovering around the 1% situation, that's a good place to get out too. So there's a lot of good exit points here. We'll see. Again, body closes higher than that, then that's where I just get out. And we got 20 seconds left on that candle.
So if it goes that price cycle and a half, do you usually just take it or no?
In my favor or against me?
Oh, in your favor, 1.5 price cycles. Would you just normally take it? Because
No, it's all about action points, but let's see. We're closing above this, so I'm probably going to take this right now.
I wouldn't grab it down on that blue there because that was like,
yeah, because it hit that bounce point, right? So yeah, like I said, nothing wrong with either one. What I was looking for is for it to come down, and if it ignored that, it would continue to if it ignored this cross, then you'd get another test, and on test number 2, you could get a potential break. So for me, going back to risk versus reward, I'm risk losing 3 pips versus a reward of it breaking and running again. Does that make sense?
sure.
So that's the way I played it. But like I said in the beginning, right here, hitting that line is a really good exit point too as well. Particularly because if you look at the price cycles too as well, we're definitely due for a price cycle up, right? And it could come all the way up to here and still be in this channel and not break out of that channel.
Yeah.
Right? And
I
so
would
that's kind of the next
expectation of it bumping up.
Yeah, this is the next move that I would see it kind of coming up into here, maybe even testing here. I'm not confident to the point where I'd put buys on, just because it has to cross here before it gives me that confirmation, which is on the other side of this support level or this consolidation range right here. Has to cross that for me to get confidence in buying, right? And so right this second, I might just take a few scalp trades for maybe 2 or 3 pips of profit as it comes up and test this to see if we get a little bit of bounce down. In fact, I'll probably do that, put a layer on for a test of like 3 pips. While it's doing that, well, my dog out real back. Hold on. All right. Anybody hit their 1% yet on the day? Anybody over 1%? You could have easily have been there if you were a little heavier than I was. I'm super light this whole time. Lee, you got to change your mindset, buddy. Instead of no, but I never do, turn it to no, but I will. Hey, that's good, Jerry. Jerry's at 0.36 trading 0.01. That's awesome. That's really good. Okay, testing. That's why I don't like trading and take profits. That later could have been another ride the wave situation if it does in fact turn across right there. This is taken. I purposely have told myself in this session, don't trade, because I want to counter trade because just kind of, I want to, and I see this, I'm like, oh my gosh, look at how it's due for a run up. And I want to trade, but it also has given me marching market vibes. And so I've had to constantly tell myself not to click that buy button and wait for confirmation. Because with normal trading tendencies, when I'm just like reacting and not thinking about it, I'm like, hey, look at this. This is perfect for a run up. We still might get that. And if it's going to happen, it's going to happen here off this bounce, right? And but this is today's trading is don't counter trend trade until you get confirmation, right? That's going to happen.
You can see on the M5, it did go 130 pips during London. So it's coming back to the 50 fib at this point.
Exactly.
Are we at the 50 fib?
I don't know.
It's a good question. It's retraced half the way.
Well, yeah, for sure.
Right here. That whole London stuff.
From that whole London session, right?
I mean, the bottom.
Yeah. Meant to draw it from there, but I was just one at the wrong button.
That bottom is the London Open. Bottom. There you go.
Yeah, that's 50%, sitting right at 50.
Maybe a little bit of this whipsaw on the open.
Right. And so like on
37.
Like I was saying, this is a great place for it to price cycle back up, right?
Yeah. But up till now, you would expect at least a little bit of reversion off that giant 130 pip run up. I mean, for the past hour and a half or so is what I'm talking about.
Mm-hmm. So we've gotten a test. We've gotten a test of the bottom, another test right here. If it comes back and tests again, it will most likely break. So here's your risk versus reward situation again. But if it does this move, which it's doing right now, and it breaks above this, it could run away from this test. And if it starts consolidating up here, we're definitely getting a new high. And so again, risk versus reward says if you have sells on right here, it could run away from that. And so I would look to get out of these sells pretty early. But if it does come down and test, it could break and run and play into this area right here.
Do a lot of things. I think that red line you drew is just the second out of 3 dead cat bounces. If you can see it. There's like 1 bounce, 2 bounce, 3 bounce. The red line you drew is just a dead cat bounce.
Right.
Is my thought. An upside down dead cat bounce. There's a word for that. Inverted. Inverted dead cat.
It would be an alive cat then.
Well,
because it landed on its feet.
an inverted cartoon cat bounce.
Top Gun cat. That's what Josh is saying.
I can say it. You can call it a cartoon cat bounce. That's Sean approved, so everybody knows that we're not. No real cats were harmed. You see what I mean? If you look at that big run, the first leg of it at least, there's 1, 2, 3 really super obvious dead cat bounces in it. I can point them out. If it runs like 15, 20, then a bounce.
Then a bounce.
70, then a bounce, then another 20, then a bounce. Mm-hmm. And then it gets into a consolidation there, but it keeps continuing. kind of curious to know what that was.
I might just take guys. Take this one just because it's looking like this is an area where it's going to turn. So just look for little tiny pip profits here. Still not yet a fan of buying. Just look for sells opportunities still.